everyone, John Henry here, slingshotfutures.com, and welcome to the daily futures and crypto market outlook for tomorrow's trading. Tomorrow being the 14th of the month. Overall today, not too bad. It was slow, as expected, coming off of a holiday weekend, but, well, the crypto side of things went absolutely bonkers, and, well, we'll get into that a little bit later, but along with that, we did have a couple trading opportunities today. As long as you stayed patient and waited for the best setups, well, you probably had a halfway decent day today. Now, before we jump in, as always, make sure to swing it over to slingshotfutures.com, scroll down, and click on the Join the Daily Outlook newsletter. From there, you'll be able to sign up for our free newsletter. It's sent out every time one of these videos comes out, and along with that, inside the newsletter itself, we talk about all kinds of different up-and-coming things, whether there's stocks, new cryptos, all kinds of fun stuff are posted inside of there, so make sure to grab a hold of that newsletter and sign up. Along with that, the live trade room subscription and trial info. From here, you can sign up for a free 3-day trial in our live trade room. You can hang out with us for a couple days and see what we're all about. You can hang out with us, ask some questions, see the charts, see the way that we're approaching the markets, analyzing them, trading them, etc. Really great way to get a feel for how everything works inside of the room. So if you haven't done so already, make sure to sign up for that trial as well. Now, jumping on over to the euro. The euro, for the most part, hasn't really done a whole lot. I mean, if we zoom out, we can see that, well, for the most part, the market really hasn't done much in terms of overall movement. And that's not necessarily a bad thing. You know, in the bigger picture, if we were to zoom out to something like a daily chart, we can see that we are still kind of attempting to break out of the highs of this range that was put in. And we're cycling around the retest area. This is sort of the do or die. Does the market want to continue up, or do they want to break down and fail back down to the lows? A lot of important information is being put in play right around this 15,935 area. Now, when we're looking into a closer time frame like a 60-minute chart, we can see that for the most part we're just range bound, and again, given the location, it makes a lot of sense. But the one thing that does stand out is simply the fact that when they tried to make a new low, it completely failed. Well, it really didn't do a whole lot down there, and by the time they started popping up, they used that low as support, and very frequently when you see that kind of function happen, a lot of times they have a good amount of follow-through back in the opposite direction. Now, is this the bottom that we're putting in on the euro? Maybe, maybe not. It's always really difficult to call the bottom while it's happening, but this does look like at least a short-term bottom is being put in for an attempt to rally back to the upside. Major objectives are going to be to at least retest around 17,500s, 600s in that area to kind of reclaim some of these previous swing lows, swing highs, this chop zone. That's what they broke out of. And a lot of times when you see these big breakout moves, they love coming back to retest those again. And that'll be another decision point. Just like we were looking at on the daily, looking at the hourly, you know, what do they want to do here? The decision point is, do the sellers want to take it back lower, or are the buyers going to break out above it and use it as support just like we did back here? That's going to be the big question. We have a little bit of time before we have to answer that one, but overall, in the short term, at the very least, it does look like they're trying to put in a bottom to the euro, so I would be looking for the buy side at the moment, trying to pick up a dip. Nice little potential bull channel rising higher, and it does look really solid for a possible channel. Anywhere at the channel lows or lower, possible fake break on the bottom side could be a nice area for buyers to jump on in, i.e. a trap lower, would look nice for continuation to the upside. Right now, we're just kind of in the middle of it, and if we look even closer, we're in the middle of a smaller little range here. Not the best place in the world. I would rather be looking for a slight dip down, especially a trap below 16,445 would be very nice for continuation to the upside. Over on gold, still a choppy, sloppy mess. Lots of range-bound movement, lots of back and forth, and a lot of nothing happening. Now, we did just recently come off of a strong breakdown, and very frequently one of two situations is going to happen. That breakout is going to completely fail, like we saw here and like we saw here, or you're going to see continuation. They fail to reclaim those previous areas of structure, and they drive back down to a new low. So we have two different scenarios at play here. Now, if we zoom out once again to a daily chart and kind of get our bearings in terms of location, we're not really in anywhere of major interest. The channel lows are a little bit further down. We could have even blown off the highs of a channel above here. We're just sort of in the middle of this chop zone, and not much is really standing out in terms of location. So because of that kind of lackluster location, we have to then use shorter term as our emphasis. And given that every single time we've had one of these breakout moves happen, they've failed every single time. So that leads me to believe that this instance isn't likely going to be much different. But the one caveat to that is we are coming off of extremes. Right? If we look at the overall price, we did cycle off of a lot of these swing highs. The only one that really wasn't broken was up at 93. All of the other swing highs have broken, and now they're looking at a potential failure. So this could just be a fake break high, and this might be one of the only ones, and we have to say a probability of about 35% or so that we do get a secondary leg. But if it does get a secondary leg to this, you'd be looking for a strong breakdown to a new low. So low probability, but high reward potential to the downside for the sellers. Now, for the traders who are going to be fading this move, they have a much higher probability, given the fact that every single time we've had one of these big breakout moves, it has completely failed. And this looks very reminiscent of here, right? We broke down, started kind of looking like a bear flag, and then it just got worse and worse. Might be finding the same thing here. So if we break out to the upside, all systems are go for a retest of the highs, and then we might be able to get up to that 93 area for a possible test. Regardless, though, we have two different phases. Right now, the buy side has the higher probability, and the sell side has the lower probability. It really comes down to personal preference in terms of what you like your risk reward to be. Both sides, I think, are viable right now, and that is likely why we're stuck in a range. Over on crude oil, beautiful bullishness over the last several weeks, and now we're getting a little bit of a stall, a little bit of a pause in the market. One big thing that really tells us is not necessarily that the buyers are done, but that the buyers want to buy at better prices. They're not interested in getting stuck buying the high, hoping it goes higher. That hasn't worked, right? Otherwise, this wouldn't be a failure. This would be an actual breakout. That was a failure, so that leads us to believe that buyers are looking for cheaper prices, and because they don't have much else to work with, previous major swing highs, previous swing lows, those are going to be the areas where a lot of buyers are going to begin accumulating, and we are in one of those areas right now. Between 56.79, really down to, I mean, arguably 56.56 down to probably 56.29. That zone inside of there is going to be a very nice area for accumulation longs. Now, one thing that does also stand out here is simply the fact that it's a pretty obvious range, not anything of a big surprise, but we do also have the possibility of a 3-push wedge bottom. It's so shallow, it won't even let me draw it, but another test of these lows would be a big trapping point, and a lot of buyers are going to start accumulating that low below 56.20. We would also have the 200-period moving average coming into play, a lot of things stacking up in that same location, and if we start looking at the potential of something like a fib retracement, looking for, does anything line up around that area? Well, kind of. The 50% is right there at 55.91. So we're stacking up three major things. A 3-push wedge bottom, you have the 200-period moving average, and you have a 50% just below that at 91. Looks pretty good. It looks like a lot of things are stacking up in the same place on one more test at the bottom. Either way, we are in a bull trend, and I am looking to be a buyer here, but I would prefer to buy those lows at as good of a price as possible. And then finally, the S&P, mostly a range-bound mess here as well, not a whole lot going on. Zooming out to a daily, of course, we are monstrously bullish, and we're pulling back. We're still holding the moving average, the fastest of the bunch. The only time we had a dip below that was to the next one, and that one held really well also. We're getting good continuation to the upside. Buyers are buying aggressively off the moving average. If we do get a dip lower, we would just be looking for the next moving average, because that's what happened every single time along the way since really December of last year. So looking for that continuation does make a lot of sense. On the 60-minute chart, we're mostly just a range. There's not a whole lot going on. A slight grind to the upside, and we can see these ranges are getting very, very wide. It's a good telltale sign that we might rotate into more of a range in the longer term, and we could be looking for a low all the way back down to low 2500s. But for right now, we are putting in a potential higher low with a trap on the bottom. The trap on the bottom being right there. They ticked the bottom, went full engulfing mode on the 60-minute chart, and keep in mind, this is 1 hour per bar. We've got 1, 2, 3, 4, 5, and going on 6 straight hours of upside with not a single bear bar. We had a small little doji in there, but not a single bear bar, and that gives a lot of benefit for the buy case on any pullback. Buyers going to look at this thinking, man, I just need to get a pullback, whether it's a single bear bar, whether it's a 38.2 or a 50% or whatever your favorite fib is, it doesn't matter. Buyers are going to be very aggressively buying this, trying to get that secondary leg up. The same thing happened back here. Single bear close and rallied back up to a new high shortly thereafter, kind of anticipating about the same thing. But with that trap on the lows, that leads us to believe that there might be a little more juice in the tank here. Maybe not necessarily all the way back up towards 25.93, but but at the very least, close to 25.90 would make sense to see in the next couple days with this bullishness. So that's going to do it for the futures outlook. Now, the news for tomorrow, definitely not like today. We didn't have any news today. Tomorrow, we do have some big news, most of it coming outside of the U.S. At 2 o'clock out of Germany, we have the German GDP for quarter 3, forecasted at 0.6%. At 4:30 out of the UK, the CPI for October, forecasted at 3.1%. At 5 o'clock, we have the Bank of England, Governor Carney speaking. 5 o'clock out of the U.S., we do have Fed Chairwoman Yellen speaking. Kind of an oddball time for her to be speaking, but at the same time, well, maybe that'll get some of the early morning movement to really kick off. But for right now, early morning, if you are one of those types of traders, you got to be careful at 5 o'clock tomorrow with Yellen on the microphone. Also at 5 o'clock, we have German ZEW economic sentiment for November, forecasted at 20. At 5 o'clock out of the Eurozone, Draghi is also speaking. So we have kind of the big two, right? We've got Yellen and Draghi at the exact same time at 5 o'clock. That is a big deal. So, for me, I'm not going to be trading then anyway, but 5 o'clock could be a big moving time for a lot of these markets. So again, you early morning traders, you got to play it really careful tomorrow. Might get a little bit choppy, sloppy. 8:30 for the U.S. session, PPI for October forecasted at 0.1%, and then later in the afternoon, evening session at 18:50 Eastern. Out of Japan, we have the GDP for quarter 3 forecasted at 0.3%. Now, taking a look over at the cryptocurrency side of things, Bitcoin is catching that higher low reversal that we were talking about on the Twitterverse. Beautiful correction to the upside and now holding a little bit of moving average resistance. One thing, zooming out, I'm still eyeballing that deep correction down to 4,900s, 4,800s. I would love, 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 love to see a deep pullback like that. That would allow a lot of buyers to get in at a very good price to try to pick up that little low. That said, are we going to get it? Well, there's a lot of stuff going on right now. Bitcoin Cash and Bitcoin have been kind of fist fighting each other. Bitcoin Cash is currently going through a fork for the next 4 hours or so that just started at 1400 Eastern. And really, we're just kind of a battle zone. For a little while there over the weekend, it felt like Bitcoin Cash was trying to do a hostile takeover of Bitcoin. And, well, that led into a monstrous rally all the way up to 3,000. Bitcoin pulling back all the way down to a low of around 5,500, at least on Coinbase. And, well, we're just kind of finding a little bit of a balance. I don't necessarily believe that the legs to the downside are done. But that said, the long term, I am still very bullish. I don't think Bitcoin Cash will be able to usurp Bitcoin from its throne. I think it might be a contender for the next couple months, and that's something that we need to pay attention to. But for right now, Bitcoin, this might just be an opportunity to buy it cheap. And if we get another dip to the downside, especially around 5,000s, 49, 4,800s, that is a big, big area of potential lift. The last time we had that kind of breakdown, that pushed us all the way up to nearly 8,000. Now, one interesting thing that kind of stands out is if we look at a weekly chart, we have a bear engulfing weekly candle. The last time that has happened, depending on your definition of what an engulfing candle is, you could argue this is one as well. But even if that is one of your definitions of one, it's usually followed up with several weeks of non-movement. They might try to trap the lows, trap the lows, trap the lows, but usually once that low trap has been made, it has a big reversal to the upside every single time that has happened. So, and even one right here, again, depending on your definition, we had a trap low and it just didn't stop going up. Another one right here and didn't stop going up. Another one here, you get the idea. So now that we have a weekly in bear engulfing candle, I would be looking for any traps below that low. Likely, given historical movement, that is going to be the case. And buying pressure around that 5,500 or so, and of course all the way down to 4,800 is going to be a big, big deal. So not something that you want to lose sight of. Over on Bitcoin Cash, we'll talk about it briefly. Right now, I'm going to try to stay away from it. It seems like a pump and dump kind of scenario, and there's just a lot of battling going back and forth. Not my kind of environment that I really want to find myself in, but we are cycling back and forth between support and resistance, finding support at around 1,000, looking for resistance at 1,600s. They did have a push all the way up to the highs at 3,100 before collapsing all the way back down and losing about 70% of its value. We're just kind of floating around in the middle. Likely not a whole lot is going to happen now that we are in fork mode. We're going to be stuck in this area for a while until this fork is done, and then from there we'll have to play it by ear. Bitcoin Gold also catching a little bit of a dip after that monster rally to the upside. Bitcoin Gold was definitely not the, or cash was not the only one that caught that monster lift. Bitcoin Gold pushing up to almost 500, 478 or so before dropping way back down to 200, finding some support off the big round number, and then just kind of ratcheting around. Now, Bitcoin Gold has just launched, I believe last night is when it opened up, their ability to mine Bitcoin Gold, and that is likely where a little bit of this bump in price action is coming from. I noticed on some of my mining rigs that Bitcoin Gold, using the Equihash algorithm, did kick up and have a lot of demand. So last night, if you were a GPU miner for the Equihash algorithm, you probably got paid out pretty well, just due to the increase in massive demand. It has since kind of settled back down again, but a nice little bump there, a little bonus thanks to likely Bitcoin Gold on that one. I'll take it either way. But again, I'm going to stay away from these forked currencies for a little while until they kind of get done punching each other in the head. Over on Ethereum, Ethereum is a little bit of a mess. We have a wedge top being put in. Line in the sand is still active. They tried to break above it, and they have since failed. They tried holding it, right? We had that big breakout above. They tried holding it, didn't do so well, and now we're using it as resistance. So once again, we are stuck in waiting mode. Because of the wedge that's forming, I would love to see a fake break of the bottom, looking to buy as cheap as possible, and that would be at around 307 or so, and then looking for the rally back up. But until we break out of the highs of this, I'm going to have a little bit of trouble putting too much faith in this to really kind of hit the buy pedal, the gas pedal to the upside. For right now, we're just kind of stuck. So as is, I would be looking for a fake break low to try to get some better prices. And then we've got Litecoin. Litecoin running into the exact same problem. A lot of this coming on that failed SegWit2 fork news, catching a big, well, after that monster rally to the upside, then dipping all the way back down. We have now failed below the line in the sand once again on Litecoin, and kind of the same situation as Ethereum. We have a little bit of a wedge. I'm still looking to buy as cheap as possible. I think this line in the sand, as long as this stays intact, we're going to have trouble, and we are right there again, and we failed above it several times now. After a good play off of it, right? They actually did buy it fairly aggressively there, and now we're failing back underneath it. So now the game plan is to buy cheap and look to hang on for a while. Over on Neo, not much has changed. We're still playing both sides of Neo, looking to buy more, sell out of it. It just keeps ratcheting between these levels of support. 26,822 down to 23,218, and resistance at 32,77. As long as we're stuck inside here, just going to continuously play those ranges. They've been working really well so far. There's no need to really go anywhere else if you want your range plays. ETP finding some balance off of major support just underneath $3. Slight rising level of support coming into play as well. Long-term ETP still looks okay, and we are in a major reversal zone, so it's not a surprise to see us chopping around here for a little while. While we're here, this is kind of like a line in the sand, right? If we break down, we look to use it as resistance. If we do catch that break to the upside, we're looking to use it as support and continue back up. Major objectives, of course, being to the upside and reclaim those highs at around $6, $6.20 or so. For the increase in price there. And then finally, ADA catching a little bit of a pullback as well. That level at 411 we've been talking about for a while was an absolute beast. And now that we finally tried breaking down below that, we have another one in play at 375 down to 372. A couple levels of horizontal support and resistance lining up really well, and a 50% stacking up on the exact same place. Certainly nothing to shake a stick at. That is going to be the next major level of support if we even pull down that far. We are forming a little bit of a wedge, and we're going to need to break out of that before we can reclaim bullish movement. But aside from that, everything is still looking good on ADA for the long term. It's just a matter of waiting it out and letting it do all of its choppy, sloppy stuff in the middle. So that's going to do it for the overall outlook across the markets. Lots and lots of action going on. Again, for me personally, I'm staying away from Bitcoin Cash and Bitcoin Gold for now. I'll let them bicker with each other, and once they figure out what they want to do, then we may find some more trades. We've had plenty of trading opportunities over the weekend. Now it's a little bit of calm time. Let them rest a little bit and then approach it with a fresh mind in the coming days after all this fork stuff is done. Aside from that, though, hopefully you found it interesting. Maybe you found something you can add to your tool belt for tomorrow. As always, if you have any questions, you can always send me an email, jbrink@slingshotfutures.com. Doesn't matter what market you're approaching, like we always say, if you're trading a market, you gotta make a plan. Trade that plan, follow the rules, and you'll be A-okay. Until next time, we'll see y'all then.